the next topic is relevance or importance of accounting. The importance of accounting has classified into two perspectives. One is to the business organization, to an individual's perspective. First one is relevance to a business organization. How accounting will be relevant to a business organization? The first one is manage cash flow. Second is manage cost. Third is health status. Fourth one, red flags. Fifth one is empowers you. And last one is evolve and improve. First point, manage cash flows. To manage your cash flow, to manage your cash, you need to keep track of your money, incoming and outgoing. It is only when you have a grasp of the cash flow in your business that you can plan and strategize well. So managing cash flow can be understood by preparing a statement called cash flow statement. The inflow of cash, the outflow of cash can be identified easily by preparing a cash flow statement. And that helps the management to take decision and manage the cash in a better way. The second relevance is manage cost. So cost means the expenditure incurred by the organization for producing the product or providing the service. It can be fixed cost, it can be variable cost, or semi-variable or semi-fixed cost. A cost accounting plays a vital role in fixing the cost of the product. So cost accounting is a branch of accounting and that focuses on how to reduce the cost and how to use the resources properly to reduce the overall cost. The third relevance is health status. Accounting reports give you a clear report on different aspects of the health of your business. Health of the business in the sense like whether the company's financial status or position or their activities are in the right direction or not. When you are analyzing the financial statement, we can understand the health status of the business. Next relevant aspect is red flags. Accounting reports make it easier to detect any fraud, embezzlement, or theft within the company. An accounting system inbuilt checks and balances make it easy for you to detect any wrongdoing within the company or the suppliers and customers. So red flag in the sense like there are certain measures taken by organization to ensure the accounting informations are error-free, fraudless, and it is fair. The things like internal check, internal audit, etc. By doing internal check and internal audit, we will be able to understand whether any problems are there in the organization, especially with regard to the books of accounts. So that point is red flag. The next one is empowers you. When you are analyzing the financial statement or when you are understanding more about the financial statement, it actually helps you to understand where you are standing, where you want to go, how you can attain your results, or how you can reach your goals, etc. It actually empowers you by understanding more about the strength, weaknesses, opportunities, and threats of the organization. The next relevant aspect is evolve and improve. So time spent porting over your financial records will show you where your business is doing well and also where is room for improvement. Every time company have to think about the improvement and evolution. From time to time, company have to change their product design, product packaging, customers, etc. In order to understand the actual taste and preference of our customers, we should thoroughly watch the market. We should understand what their requirement. We need to conduct various studies, etc. Accounting is also used as a medium for understanding all these aspects. So far, we were discussing about the relevance of accounting to a business organization or the business organization's perspective. Next is individual's perspective or the individual organization's perspective. So these are the relevant aspects. First one is budgeting. Second is spending. Third one is investment. Fourth one is taxes. And last one is savings money. Budgeting. Setting a budget is one of the first and most important steps that any accountant does for the client for themselves. To set a budget properly, you need to carefully analyze your income, fixed expenses, and existing liquid assets. Once you have done that, you can see how those numbers line up with your financial goals. Budget is nothing but the preparation of probable expenditure and probable income for a period of time. It is a responsibility of the organization to prepare budget for the financial year to understand what all incomes they can expect and what all expenditures they have to incur in the future. That is what budgeting. Second is spending. Budgeting well means balancing spending with income and making sure leave money left over in case of any emergency or saving should not unexpected emergencies occur. We have to spend money for meeting our day-to-day requirement and long-term requirement, but at the same time, we have to keep some amount of money as liquid. Otherwise, it will affect the working capital requirement of the organization. Third point is investment. The concept of appreciation is essential for investing money. Concepts like the time value of money and the decent grasp of accounting principles can set you up to make wise investment for your future. Investment decision, one of the important aspects for every business organization. If they have sufficient amount of money in hand, they should invest into some potential and profitable investment avenues. But at the same time, they should ensure the liquidity of the company also. The liquidity and the profitability both are going in the opposite direction. If you are keeping more priority to liquidity, it will have an impact to profitability. And if you are focusing more on profitability, that will affect your liquidity. So these 2 points we have to consider while taking investment decision. The next point is taxes. A common interaction that most people have with accounting is during tax season. If you have kept up with tracking your expenses and income throughout the year, tax season will be easier. We know that the tax system prevailing in India is much complicated. While preparing the taxes or even while preparing the books of accounts, the identification of tax amount is a huge Herculean task. In order to avoid these kind of instances, we should plan for taxes. We try to pay the taxes in advance by understanding our expenditure and income. The next point is saving money. Saving money is essential for building a budget that enable you to hit your goals and supplement spending, saving and investing. Every company have to save some amount of money for their future requirement that help them to meet the unforeseen contingencies, etc. And some occasion they'll get opportunity to buy the materials at a very lower rate if it is available in the market. So those kind of opportunities can be used if you have sufficient money in your hand. That's it. Thank you. This is the end of the session. We will discuss the next topic on the next class.